everyone. This is Michelle Mish Schneider, Chief Strategist of MarketGauge.com with the segment of Your Daily 5. It is July 26th and a very heavy week with the Fed meeting, obviously tons of earnings. We have PCE at the end, and not to mention all the geopolitical issues all around the world and, of course, weather issues all around the world. So I thought for today we would focus on something that I've been thinking a lot about, which is storehouses for raw materials. So in essence, what we're really talking about here are places that actually hold every kind of raw material, from mining to commodity trading houses that have supply, to paper, to lumber, to oil and gas and energy. Because with raw materials now in higher demand, and because of capital expenditures really going heavy into infrastructure within the United States and in Europe as well, and with the market showing signs of the potential of at least avoiding recession, at least for now, and possibly even having some economic growth, these raw materials that were impacted originally from COVID, some of which are in super low supply and high demand, especially stuff for the EV space, but as I mentioned, infrastructure, and of course, oil and gas and energy, which has taken a big jump lately because not only do we have incredible low supply, but we've had way more demand than what any of the economists anticipated. So I'm not going to focus on the actual raw materials today, except for one. The rest of these are going to be companies, and I'm going to show you the list, that actually do exactly what I just said. So we've got Billiton, Dow Chemicals, Exxon, International Paper. I am going to throw copper in there as the ETF because I just thought the chart looks interesting. Archer Daniels. Some of these have already made some moves. Some of these are really very actionable right now. And then I said for giggles, I put in Bumble because there was some news on the Bumble app. And it's also a stock we've been watching all year and finally decided to jump in. So let's get started. All right, so this is Billiton General Mining. It's an English company. And you can see that it's kind of a thin stock. And how do I know that? Because we're seeing lots of gaps all over the place. So when you're going to trade a thin stock, what you really have to make sure of is that you understand your risk reward and that you basically tune out the noise. But just looking at the chart generally right now, I can see a couple of things. Number one is, and this is what I'm particularly going to focus on, is with our leadership indicator, which is our ACP plugin for stock charts. This is a very, very good indicator because it's telling us whether or not any instrument that I'm going to show you today is underperforming or outperforming the benchmark, which is the S&P 500. So if you look here, you can see that the red line is basically the ratio line, and the blue line tells you that right now, Billiton is indeed outperforming the S&P 500. That's interesting, right? If we look at the price chart itself, it's in an accumulation phase, not a bullish phase. Why? Because the 50 is still underneath the 200. However, both of the slopes are pointing upwards. You can see that these Bollinger Bands that we've set in on price have been actually pretty reliable in that we broke out of it yesterday, the 25th, and now we're having an inside day with this being slightly lower today. That doesn't necessarily concern me, especially after a big gap higher. And then, of course, if we take a look at the momentum indicator, which is our real motion plugin, we've gotten right to the Bollinger Band resistance, and we have not been above this Bollinger Band in terms of momentum. Really, one quick peek up here, which of course turned out to be a mean reversion top, and that was right at the beginning of the year in January 2023. And we haven't gotten there since. So do I think there's opportunity here? Absolutely. By the way, this is a daily chart, just so you know. And so what I would be looking for right now is, let's watch this inside day. You could have a very tight risk opportunity if the inside day holds and we take out the highs here, which would be the high at yesterday, which was at 64.48, so let's call it 64.50, you would have a really good tight risk to under 63, about $1.50 for a $65 stock, essentially. That's not a bad way to go if you're a short-term trader. If you're a longer-term trader, you might want to say, well, I really want to be able to risk to under 58 because I really think this thing is going to fly. And if you're really more of a buy and hold, then I would probably say I would be looking at a move to under 56.80 as my risk. The point is that if we look back in history on this stock, the high really was up here at $80. So you always have to determine if you really think this is something that can continue to move up, and I think this is going to be a hot space as the year goes on, how much risk reward am I going to have? If I'm going to risk, almost $10, that means I want to make 20, which basically means that you would be a little less than a 2-to-1 if you were looking for a move just to match the highs, and you would have to be pretty convinced this was going to new highs. Me personally, if I were going to trade this, I'd probably look for the tightest risk, which would probably be some kind of move underneath this 50-day moving average. Okay, the next stop, also similar in that it's a storehouse of raw materials, is Dow. Now this is mostly chemicals. This is Dow Chemical. Now I think this has even more potential than Billiton in essence, because I just like the chart position here. Number one, comparing it to what we just saw with Billiton, this is underperforming the SPY. So that means that if the SPY turns down and this holds, or even goes a little bit higher, and we'll talk about prices in a moment, that means this can start outperforming the SPY, and that would also be a good indication that it's got some upside there. And number two is if we look at the real motion indicator, of course, we're above the 50-day moving average. The 50 is above the 200, which means that we have a bullish divergence between momentum and price. Momentum is in a bullish phase and it's inclining. It's still not wowing, but it's inclining. And yet the price is still in an accumulation phase because the 50 is still underneath that 200. Now, another big day yesterday followed by an inside day today, which of course makes sense considering the whole world seems to be counting on the Fed to make the final decisions about where the economy is going. I sound skeptical on that because we all know they're going to raise by 0.25%. And what really matters is not so much what happens now, but what happens in the future, and can they actually control some of these considerations that we've had that are driving inflation back into the limelight. So with that said, if you want to use a complete, utter inside day has to break out of the outside day, then really basically you would be waiting for a move over 55. Me, I would feel pretty convinced that if we got over 54, say 54.05, after the Fed meeting or the next day, that would be a good impetus for me to be looking at potentially starting a position here. And always check your earnings, of course, that could be an X factor. And if you wanted the tightest risk, I would go for a risk underneath the moving averages and this low under 51.76. That would make sense. So now basically it's like a $2 risk, which means can you make $5 in this? Well, if it gets through 54, can this get back up to 59.60? Yeah, that's the last time we had all this congestion here, again, at the beginning of the year before we started to see the commodity sell off. If we just go back in history, we have been all the way up here at 71.72, and that was back in April of 2022 before we had the quote-unquote peak in inflation. I still think that we're going into round two. Third stock now is Exxon. Now, Exxon also is, obviously energy, oil and energy store. And I love this chart because what we're doing is we're consolidating here above the 50-day moving average. We had an inside day Tuesday to Monday's range. We're getting a second inside day today, again, waiting for the Fed, which tells me that very simply a move over 106.10, yesterday's high, would probably be the compelling place to be looking at going long. And again, not outperforming the SPY. That could change, but right now that would be something I would also want to see happen. And also interesting is that we have a little bit of a bearish divergence in that the momentum here is not above the 50, even though we're sitting there in price. So I would be a little bit more patient, but I believe that if we can get that move, say, back over 106, and the SPY particularly starts to move down or even just flatlines for a while to consolidate, this could start outperforming and we can see a push in momentum. And after all this work that we've seen in the chart, this does look to me like a visit to 115 would not be out of the question. Now the next one is international paper. I actually wrote a daily on this a couple of days ago when you had an opportunity to get in, because I said through 32.50 was the buy point. And of course, yesterday it cleared it. And now we're getting a little bit of a digestion day. But again, this is international paper. So they're a storehouse for lumber, paper, basically things that need to move using raw materials. And so this is a pretty good company. Again, I'm not talking about earnings on any of these, so that's something that you should be looking for. But strictly on price, we've made a nice move through the 50-day moving average. Obviously, we have the 200-day moving average to get through, but I'm really liking this base. I'm looking for things that have been basing out really basically since the decline that we had in commodities and now are starting to get through all of the work they did, which is certainly the case in this one since May, right? So that's like 2-3 months. If we take a look here at the momentum, guess what? Here we are outperforming the SPY, so that makes this ripe. And look at this. We're not only over the Bollinger Band in the momentum indicator, but if we do this, we can see that the 50 is starting to overtake the 200. So this is in a bullish phase in momentum, very strong in momentum, bullish divergence to price, which is still not over its 200. All in all, I think this looks like a very impressive stock. Maybe I would want to see some kind of a hold now about 33.20. Or at this point, I think it also behooves you to wait if you can't get the dip, to wait to see if it clears and confirms over this 200-day moving average. Now we're going to go to the actual commodity ETF that I was talking about, which is copper. If we're going to Dr. Copper, right, if we're going to go into any kind of economic rebound here, we definitely need to see copper cooperate, but copper has other uses besides just in construction. It's very big in the EV space. And everything that I have read has indicated a shortage of copper. And so no surprise to see that we had a big gap coming into this week with an inside day, the Fed day, digesting, outperforming here on the SPY and running into a little bit of resistance. This is in a bullish phase, by the way, against the Bollinger Band on the momentum. So we need another push. If we get, first of all, you can use a gap, right? When something gaps up like that, you always have the opportunity to use a very tight risk if you're more of an active trader underneath the gap low, which would be 40.27, not so far from where it is right now. You can also use an inside day rule, which means that you buy it on the breakout of the outside day high, which is 41.31, and you can still use the gap. In this case, there was another gap here, which never got filled. So you see how these gaps are great. And that would be really another area to be looking at, which means basically it has to hold about 38.75. Where can copper go? Well, what's interesting is, again, look how far we have to go back. But we have to look at $47 again before the peak inflation in 2022. So this is something I think that also has a lot of potential and could possibly not only take out that 47, but go on to new highs. And the last one that's related to raw material storage is Archer Daniels. This is food products. Look at this. This not only has cleared, and I'm going to make this chart a little bigger, the 200 confirmed yesterday. You had a big move yesterday, but now you've had a nice little move above the Bollinger Band. We're getting right now a doji day in terms of price. Look at the outperformance. This is why I love looking at these indicators, these ACP plugins. I use it for everything, all of our trades. And right now, if you had just waited for the indicator to show outperformance to SPY and a phase change, you would have gotten in on this one at 75. You already would have had $11 worth of profit. And if you look at here, you can see that at just about the same time, the momentum started to clear the 50-day moving average. Now momentum has cleared the 200. It has cleared the Bollinger Band. This is definitely in momentum. If you're a momentum type trader, this is a nice one to follow with a pretty tight risk. Or if you prefer to wait, see if we can get a move down to closer to around 83. And again, if we just go back a little bit in history here, we're looking at highs at around 100. Those highs were made, surprise, surprise, April 2022. So this too has a lot of potential, particularly if we continue to see food prices as an issue. If you just look at countries like India right now, they're not even exporting their rice, which is creating rice hoarding in other countries. That's the kind of thing that people don't necessarily look for or even count on. And yet commodities traders like us basically know that these sort of things can really take on their own life. Finally, this has nothing to do with commodities, but it just caught our attention with some news lately, and I've been watching this stock all year. This is Bumble. Now, what is interesting about Bumble right now is that it did start outperforming the SPY here. So getting in here and making this move up would have been a nice little trade. Look at how beautiful. Clears the 50, fails the 200. But we found it to be interesting now that it's all retraced back down, not necessarily counting on it getting to the 50. But what I liked about this is if you look at the gap, the low on this day was 1790. The high on this day was 1771, which means if you sort of take somewhere in the middle, 1780 is your risk. It should not break and fill this gap at 1780. And now that it's back over the Bollinger Band, it looks more interesting to us. Can it get through the 200-day moving average? We don't know. It is now slightly underperforming, but with any move higher, it could actually start outperforming once again the SPY. And looking at the momentum, look at that. I mean, these plugins are just fantastic because right when you got to the resistance at the 200, the next day, and really basically the day after that when it started selling off, you had your mean reversion. Now we're waiting to see what happens here. It looks like the 50 can overtake the 200. So we have a bullish divergence in momentum because this is over both moving averages where the price is only over one. All of this to me right now looks like a decent risk reward. You can obviously risk much lower for position sizing, but for me, my money would say 1780 really has to hold. And at this point, of course, like everything else, probably waiting for the Fed meeting. If we can get back through 19, we'll see what happens as we get closer to those major moving averages. Okay, so that's it for now. I hope this was helpful to you. Yes, we are definitely bullish, not only in the raw materials themselves, but in these storehouses that we mentioned, and a couple of these other stocks that could get going for the reasons of their own. In terms of the overall market right now, obviously, who wouldn't be impressed with the fact that the Dow is now working on 13 days up in a row, but you cannot help but notice other areas that are also going up, like gold. So it's going to be an interesting battle this week to see what happens after the Fed meeting and to see what happens with the rest of the earnings this week and to see if we don't get some kind of rotation more, not only into staples and value, but also, as I said, more buying of those commodities. So thanks so much for watching. You all have a great rest of the week and bye for now.